Welcome back to the Malaysia Money Matters show. It's February 18th, 2025, and we've got a lot to cover today, from the latest moves by Malaysian companies to international events that could hit your wallet.
Yeah, we're going to break it all down for you so you can stay ahead of the curve.
Okay, let's dive right in with some company news. First up, 99 Speed Mart. Their stock price has dipped about 20% since its peak back in December, and some analysts are saying this might be a chance to buy low.
Interesting. Their Q4 earnings are coming out soon, and on top of that, the founder shares will be free to trade come March once the lockup period expires. A lockup period is basically a set time after a company goes public when early investors aren't allowed to sell their shares. So with all this happening, 99 Speed Mart could be in for some volatility. It really depends on whether investors see this dip as a buying opportunity or a sign of trouble ahead.
Definitely a lot to watch there. Now let's shift gears to Ecoworld Malaysia. They've been making headlines by selling land to Microsoft for data centers, RM $694 million for just one plot.
That's right, and it's actually their second major land sale to a data center player in under a year. In total, they've raked in a whopping RM 1.3 billion. It really highlights how Malaysia is becoming a hotspot for big tech, and this kind of investment could have a ripple effect, attracting more companies and creating more jobs.
That's great for Malaysia's economy, but not all the news is positive. CIMB has issued a warning about potential risks for Malaysian property developers operating in Australia.
Right, Australia is trying to cool down their property market, and they've implemented a ban on foreign investors buying existing homes. This could definitely impact Malaysian developers like Sunrise or SP Setia, who have a significant presence in Australia. They might see project delays, reduced demand, and potentially lower profits. So if you're investing in these companies or considering investing, this is a development to keep a close eye on.
For sure. Now moving on to some internal shakeups. Maybank's group CFO is exiting after an internal inquiry.
Yeah, this news is raising eyebrows for sure, especially since the details surrounding the inquiry are still pretty unclear. The CFO is claiming termination and plans to take legal action, so we'll have to wait and see how this unfolds. But anytime you see a high-level executive exit like this, it's natural to wonder what's happening behind the scenes.
On a lighter note, Rich Tech, an e-reload and bill payment company, had a stellar debut on the ACE market, which is a market for smaller growing companies. Their stock price tripled on the first day of trading.
Investors are clearly optimistic about Rich Tech's growth potential, although the company has said they're not planning to pay dividends anytime soon. They want to reinvest those profits back into expanding the business. It's a classic growth strategy, focus on building market share now, and hopefully the dividends will follow later.
Speaking of growth, Kinergy is partnering with the Perak State Agency to develop a whopping 29 renewable energy projects.
This is a major move for Kinergy and could be a game changer for Perak's energy landscape. Renewable energy is a hot topic globally, and it's exciting to see Malaysian companies like Kinergy taking the lead.
Now, not every company is going gangbusters. Teo Sang, a major egg producer, saw a dip in their fourth quarter earnings. But overall, they still managed to achieve record high profits for the full year, and this is the second year in a row they've done that.
They're optimistic about the future, and they have every reason to be. Demand for eggs is pretty stable, and they've shown an ability to navigate market fluctuations and deliver consistent growth. It's a good reminder that sometimes the less flashy, essential businesses can be very solid investments.
Absolutely. Now here's some news that could directly impact your wallet. Malaysia, along with Indonesia and Thailand, is working to make it easier to do business using local currencies instead of relying so heavily on the US dollar.
This is a really interesting development because it could potentially shield us from those wild swings we sometimes see in exchange rates. If you've ever traveled abroad or bought something from overseas, you know how much those currency fluctuations can affect your purchasing power. So this move towards using local currencies could bring more stability to international transactions.
Makes sense. Moving on to some investment news. The family behind the Chin Hin Group, which is a big player in the construction materials industry, just acquired a stake in Sing Sing, a stainless steel manufacturer.
This move definitely makes you wonder what their strategy is. Are they just looking to diversify their holdings, or is this a sign of future consolidation in the stainless steel industry? It's something worth keeping an eye on, especially if you're interested in investing in that sector.
Speaking of keeping an eye on things, Ho-Hup Construction has finally settled a long-running legal dispute with Sunrise Model over a property deal.
It's always good to see companies finding common ground and resolving disputes. Legal battles can be costly and distracting, so this resolution should allow both companies to focus on their core businesses and move forward.
Now let's turn our attention to SMRT, an Internet of Things solutions provider. They had a solid quarter, reporting a 7% increase in net profit.
And they're not stopping there. They've announced plans to expand further into overseas markets, which is a smart move considering the global growth of the Internet of Things. They seem to be well positioned to capitalize on that trend.
Last but not least, in our Malaysian company news roundup, Johor Plantations, a major palm oil producer, reported strong Q4 results thanks to higher palm oil prices. They even declared a dividend for the quarter.
This is good news for investors, and it also highlights the importance of palm oil to the Malaysian economy. When palm oil prices are up, it benefits not just the companies involved in production, but also the overall economy.
Okay, so we've covered a lot of ground in the Malaysian business world. But what's happening on the international stage? Let's shift gears and take a look at some political and economic news that could have an impact closer to home.
Right, because in today's interconnected world, what happens globally can definitely affect us here in Malaysia.
Yeah, one of the biggest stories right now is this renewed threat of a trade war between the U.S. and China. President Trump has been making some pretty aggressive statements about tariffs, and that's got investors around the world feeling a bit jittery.
Yeah, it's definitely a concern. Trade wars can disrupt global supply chains, increase prices for consumers, and even slow down economic growth. We saw a glimpse of this a few years back, and nobody wants a repeat of that.
Exactly. And it's not just about the direct economic impact. Trade wars can also create political tensions, uncertainty, which can make businesses hesitant to invest and hire. So it's definitely something to watch closely.
So what can Malaysia do to navigate these choppy waters?
Well, Prime Minister Anwar has been advocating for stronger regional partnerships, particularly within Southeast Asia.
Hmm?
He's been urging Asian countries to diversify their trading partners and reduce their reliance on any single country, whether it's the U.S. or China. Makes sense. By strengthening ties with other countries in the region, Malaysia can create new opportunities for trade and investment, and potentially cushion the blow if a trade war does erupt.
Exactly. It's about building a more resilient and diversified economy that can weather those global storms. And speaking of storms, we can't forget about the ringgit. How's our currency holding up amidst all this global uncertainty?
Well, the B&M governor has said that the ringgit is on the right track, but he also acknowledged that global events, like this potential trade war, could impact its future performance. It's a delicate balance, and it's something that affects all of us whether we realize it or not.
Absolutely. A weaker ringgit means imported goods become more expensive, which can lead to inflation. It can also make it more costly for Malaysians to travel or study abroad. So it's definitely a factor to consider when planning your
Yeah.
finances.
Speaking of finances, we can't ignore what's happening in other parts of the world. We've heard reports that German cities are facing some serious budget crunches due to the country's economic slowdown. This is a major European economy we're talking about, and if they're struggling, it's a reminder that nobody is immune to these global shifts.
It highlights how interconnected the global economy really is. What happens in one part of the world can have ripple effects elsewhere. So it's always a good idea to stay informed about global trends and consider how they might impact Malaysia.
Absolutely. Now let's shift our focus to a country a little closer to home, Singapore. Their property market seems to be defying global trends, with home sales surging ahead of their upcoming budget. There's even speculation that a government might introduce cooling measures to prevent a property bubble.
It's a classic case of trying to find that sweet spot. They want to encourage investment and growth in their property market, but they also don't want prices to become unaffordable for ordinary citizens. It'll be interesting to see what measures they take and whether they're effective in achieving that balance.
Now, before we move on, I wanted to circle back to one company that really caught my attention, 99 Speed Mart. They've been a familiar sight in Malaysia for years, but their recent stock performance has been a bit of a roller coaster.
Yeah, their stock price has dipped since its peak, but we also know their Q4 earnings are coming out soon, and the lockup period on the founder shares is about to end. So there's a lot of potential for movement in either direction.
It's a bit of a gamble, isn't it?
Yeah.
Some investors might see this dip as a buying opportunity, but others might be hesitant given the uncertainty surrounding the company's future.
That's the nature of investing. There's always an element of risk, and it's important to weigh those risks against the potential rewards. In the case of 99 Speed Mart, they've got strong brand recognition and a wide network of stores, but they also face competition from other retailers and the rising cost of goods.
So how should listeners approach this? Should they be rushing to buy 99 Speed Mart stock or holding back?
Well, it's not about rushing in or holding back. It's about doing your homework. Look at their financials, understand their growth strategy, and assess how they're adapting to the changing retail landscape. If you believe in the company's long-term prospects and you're comfortable with the level of risk, then it might be a worthwhile investment. But it's crucial to make informed decisions based on your own research and financial goals, not just follow the hype or the fear.
That's sound advice for any investment, really. Don't let emotions drive your decisions. Let the facts and your own analysis guide you.
Exactly. And that brings us to a broader point about navigating uncertainty, whether it's the threat of a trade war, fluctuations in the ringgit, volatility in the stock market. It's easy to get caught up in the fear and anxiety.
So how can we stay grounded and make rational decisions when the world feels a bit unpredictable?
One of the best ways to combat fear is with knowledge. The more you understand about what's happening, the less likely you are to panic. So stay informed, read reliable news sources, follow financial analysts, and even listen to podcasts like this one.
I like how you snuck that in there. But you're right, information is key. The more we know, the better equipped we are to make sound decisions.
Another important strategy is to diversify. Don't put all your eggs in one basket, so to speak. Spread your investments across different asset classes. Consider different income streams and even think about diversifying your spending habits. By spreading your risk, you're less vulnerable to any single event or market downturn.
It's like that old saying, don't put all your eggs in one basket. And I guess the same applies to our finances. Diversify, diversify, diversify.
Exactly.
That's a wrap on your Malaysia Money Matters deep dive for today. We hope this episode has given you some food for thought, some valuable insights, maybe even a spark of inspiration.
Remember, knowledge is power. And by staying informed and engaged, you can make smart choices that lead to financial security and a brighter future.
Don't forget to subscribe to the Malaysia Money Matters podcast for more in-depth analysis and insights. We'll be back next week with another deep dive into the world of Malaysian finance.
Until then, stay savvy, stay ahead of the curve, and most importantly, take charge of your financial journey.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.